Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 3rd of August. All right, now sometimes good trading opportunities just come out of nowhere, and this one sort of pops up in the first week of the month. Now, what I'm talking about is we've got a lot of instruments, a lot of major currency pairs are at critical levels where the US dollar downtrend is almost at the threshold of flipping over with the sort of consistent run of strong numbers. Now, Fitch, the credit rating service, have downgraded the US credit rating. Okay, no big deal at the moment, right? So, and if you go through the general markets, I mean, it's a little bit typical of the US, but this is what you'll start to see. Janet Yellen, okay, the ex-Fed chair, Fitch downgrade entirely unwarranted, okay, and it's just a little bit of a backlash. I mean, Fitch are probably the less influential of the credit ratings agencies. So, and you know what, ever since the global financial crisis, the credit rating agencies, they all should be locked up anyway. Okay, but that's a different story. So you're seeing a little bit of news across the board here. What it's doing, stocks drop, treasury yields edge up. Okay, the US equities have taken a little bit of a hit on the day, but overall they're still well performing above expectations, right? So when you have a look at the market right now, there's a couple of things. Looking at the market short term versus long term, okay? And what I've got here on my sort of the global market sort of data page, 1 week percentage change, month to date, 3 months, year to date, right? So you can see on a short term perspective, okay, 1 week, yeah, equities are down a bit, but you know what? Over the long haul, they are still up. And this is going to build up as we go through the sessions. Now, just on that, the US equity futures slightly up, and they are giving us a bit of a clear risk on day, right? Euro, sterling, Aussie, Kiwi going up. The dollar, well, not really going down against everything, but the dollar index, dollar Swiss, dollar CAD, and dollar NOK, the sort of main dollar pair, sort of drifting lower. Now, I'm just trying to work out the best way to sort of run you through this, because we've got a couple of key releases coming out. Now, one thing I would like to sort of go through just briefly is, okay, the US ADP national employment numbers. Now, the week of the non-farm payrolls, there's a few different data releases regarding the data. Every week we get the jobless claims, which comes out later today. The US ADP number came out with a much stronger employment number, right? The range was 150 to 280, expectations 189, comes out stronger, and they're attributing a lot of the US dollar move here to this number, right? But don't forget, this is a lot weaker than or not a lot weaker than the previous number of 497, but the market is on edge, right? Because of where the dollar is positioned against a whole range of other currencies in particular, and, you know, the big build up in the moves in the equity markets. So let me just give you a look at the charts, because it's going to sort of tell us a bit of a story and what we need to do to prepare for it. So just looking at the global markets, right? And if you're looking at the longer term trends, okay, the dollar index still down. Let me just change that to something a little bit clearer. Okay, euro still going up. Okay, the dollar index at a critical level here. So is euro. You've got gold sort of drifting lower here at a key level there as well. Oil sort of rallying through the roof. And the equity markets, on a long-term perspective, they are still sort of screaming to the top side, and you'd think the cryptos or Bitcoin's just slowly moving higher. Now, let's just have a look how that looks with the current announcements, right? So you've got the dollar index pushing to the top side, euro sort of just drifting through a short-term support level, gold sort of cranking down through a couple of levels. Looks like it could be ready for a major dip. And oil, even though it's rallied, right, it's come back to support, and he's sort of just hanging on. And here's the equity markets rolling over, right? So most importantly, if the NASDAQ falls, I think that's the key, right? It's been holding all the equity markets up, and the cryptos, well, Bitcoin's sort of just rolling over. So as you can see, there's a different perspective when you look at the charts on an hourly perspective versus the longer term daily charts, right? So you need to sort of weigh this up. Now, if I have a look into the major currency pairs, and this is what I was sort of talking about, we've got some instruments here, like the dollar has been drifting low since the CPI numbers came out weak, but we're starting to get this continual grind of stronger US numbers, right? And it's got to the point where we could be at the one last data release, whether it's the jobless claims, factory orders, or the ISM services data, which is otherwise known as the non-manufacturing data, could be the catalyst here. We've got three numbers, a 1, 2, 3 punch. We get strong numbers here on the dollar across these numbers today. I'll tell you what, there's going to be some serious cleaning out. On the top side in the dollar index, dollar Swiss could also go for a run. Euro having a run there as well. Sterling is sort of already pushed through that sort of key daily level. And the Aussie also has come a fair way, but it's ready to go down. And the Kiwi sort of just drifted through there as well. Dollar CAD's out of the game. Dollar yen, well, it could punch to the top side. I'm sure there's stop losses above 143. So we're at some critical levels here. Now, it's very hard for me to go in and get short sterling when we are expecting the Bank of England to raise rates. Now, I know that's factored in, right? So 5.25%. So they're expected to raise by 0.25%. There's an outside chance of a 0.5% rate hike. I can't see it, right? It's just too big a punch in the face for the general consumer. But the dollar, right? You're like, well, sterling, it's breaking down. We've got the Bank of England coming out, and then we've got the press conference as well. So there's a couple of things to sort of digest and really keep a close eye on. The statement from the Bank of England about what they're going to do in the future. That's what we're trading, right? As I said, the 0.25% is factored in. So don't think the sterling is going to go up when they raise rates. It would if they raise by 0.5. But as I said, I can't really see it. Now, this is where we sort of change tack, because you've got to look at sterling. Now, sterling against the dollar, momentum is down. Like the dollar is rallying against everything. Don't forget, we've been in a dollar downtrend, and it's starting to potentially flip, not to going up, but taking out all the short dollar positions. And you can see here on the daily charts there as well, it is sort of breaking down. Now, on a weekly perspective, you can sort of still see it's still heading up there, but these two will tell the tale, and that's what we're starting to see, some sterling positions closed out. People are hanging on, trying to hold on until we see what the UK or the Bank of England does. Now, but look at these charts, right? Sterling Aussie doesn't really have any resistance levels topside, nor does sterling Kiwi, sterling yen, and sterling CAD. And this is where I bring in some Fibonacci retracements. And you know what? On sterling Aussie, it's already above these levels. On sterling Kiwi, yeah, you've got a 61.8 back at like 216. So plenty of room to go there. Sterling yen is just cruising to the top side. On euro sterling, if anything, you can see here, it's sort of just trading sideways, right? And sterling Swiss, well, overall down, but for quite a while, it's just been drifting sideways, and sterling CAD heading north as well. So basically, sterling is outperforming just about everything. Now, the Swissies outperforming everything else. So to me, like sterling is going gangbusters, right? And if you were just concentrating on the major pairs, well, then you think sterling's a big sell. I don't think it is. It might be against the dollar short term here, but you know what? We've got the non-farm payrolls Friday. It's going to be a massive headache for most traders. And that's because we've got the jobless claims data today, right? If I come back to the main data here, right, we've got some like key things. Seeing the US dollar move on the those ADP employment numbers yesterday, this is going to make the initial jobless claims a massive interest, right? Any employment numbers now like huge focus. So the expectation here, 227, right? The range, 210 to 240. I mean, the previous number was 221. But as we saw, I mean, there was 189,000, well, 150-odd thousand more jobs than what the ADP forecast was, right? So just keep an eye on this. And this is obviously going to make the non-farm payrolls on Friday massively explosive, right? Each of these numbers, these employment numbers, are going to be very important for the next leg of the move. And if you come down here, right, where's that ISM number there? Oh, there it is there. Okay, so you've got, not only do we have the jobless, initial jobless claims, we've got the US factory orders and the ISM non-manufacturing numbers, right? So this is the ISM services data. So these numbers here, okay, if we get a 1, 2, 3 punch, as I said, with the jobless claims, we get strong numbers here. So for the jobless claims, a lower number is better, right? So here's your other numbers, mate. 1, 2, 3 punch. We get a massive move across the board, okay? And the jobless claims, don't forget, is an hour and a half, or is it an hour and a half? Yeah, before the factory orders and those things coming out, right? So it's a big day of trading, especially if you're in Europe, North America. The Bank of England rate hike. I mean, the high is for a 0.5% increase. The expectation 5.25. You've got the vote count there as well, but really it's going to come down to the statement and what the interest rate announcement is. And then that's going to roll into the US numbers. So sterling against the dollar could be in for a wild ride, because if the Bank of England is hawkish, right, sterling's going to rally against everything, including the US dollar. Now, if the US numbers are strong, well, it's going to reverse against the dollar, right? It gets a bit too tricky. So that's why I think you should be looking at a lot of the sterling crosses, because that's where a lot of the action might be, right? And that's where you come back in, you look at where the major trends are on the longer term perspective. Okay, these ones are all going up clearly. And then you can come back in, look on the shorter time frame, the hourlies, look for levels to get into those specific instruments, right? That's the way I would sort of cross-check it. Now, the dollar, as I said, looking at the, if we look at the majors, we've got some great trending pairs. I've been saying it all week. The dollar index, dollar Swiss, sterling, and euro are the major ones to be focusing. Sterling's given us a bit of a little bit of a peek about what's going on. It hasn't run yet because we need to see what the Bank of England are talking about. And the UK has the highest inflation out of all the developed countries, right? So it's not like the inflation problem, excuse me, is going to go away in the UK anytime soon. So do you sell sterling against the dollar? I don't know. But I tell you what, I would be buying sterling against everything else, because everyone else is like the RBA, RBNZ, all the data is suggesting weaker numbers across the board. Like some of these countries, Australia, New Zealand, they could have already topped out on their interest rate hiking cycles. The data will tell us over the next month, but it looks like it, and that's why they are lower. So sterling is on a knife edge here. I mean, euro, like if we get, I don't think we're going to get any bearishness or dovishness out of the Bank of England. And then it comes down to primarily the dollar index, dollar Swiss, and euro for the US numbers, right? You got 3 bites at the cherry here. And as I said, there's going to be stop losses under this under 109.20 in euro, and definitely above. Well, it's like the dollar index is at that key level now, 102 sort of 60. So you're probably looking maybe 20 points above it. Whenever the data comes out, if it comes out strong, it's just going to accelerate the move, and there's going to be a lot of pressure on dollar Swiss on the top side there as well. Right, so sterling against the dollar may just get caught up in the whole dollar move if we get stronger numbers. Now, and don't forget, this is where it can get really funky. If these numbers that we're expecting, okay, for the jobless claims and the factory orders and the ISM non-manufacturing numbers, if they come out weak, well, everything's just going to reverse. Everything that you saw yesterday will reverse, right? That's why I'm saying, like, these numbers. So if we get a high jobless claims, we got a weaker factory orders on the low end of the range, and the ISM non-manufacturing numbers, the dollar just craps out and the whole story changes. So we're at a very critical phase. I think what you should be doing is really focusing on the instruments that you're most comfortable with, because in this situation where there's so much potential in the market, both sides of the market, you can get sort of like, it's like a deer in the headlights, right? You can just get frozen, and then you just sort of don't know what to do. Focus on the best technical pair and look for the best trading opportunity. And I'd generally go for instruments that have good liquidity. Okay, traders, now let me just sort of run you through the trading opportunities. And this sort of goes along the new product we're about to launch in the coming month, which will keep you up to date on a live basis. So just looking at the Bank of England rate decision, right? So the forecast is for a 0.25% interest rate hike. So that's neutral. If they raise by 0.5%, well, sterling's going to rally through the roof against everything. If they don't do anything, right, they leave rates at 5%, well, you know what? Sterling's going to fall very aggressively. But I can't see them doing anything except for either raising by 0.25% or by 0.5%. Now, I'm sort of discounting the 0.5%. It's very aggressive and a big punch in the face for the general UK consumer. I think they'll go 5.25% with a hawkish tone, right? So it gives sterling a overriding hawkish or sort of buying basis. But that's already factored in against the dollar. So to me, I'm leaving the dollar, sterling against the dollar out of play unless they don't do anything on rates, and then sterling's just going to fall against the dollar as well. Now, you have a look. So the Bank of England rate decision is an hour and a half before the jobless claims numbers, right? And this is where it sort of gets interesting because the jobless claims, as you've seen with the ADP data yesterday, is hugely sort of influential at the moment. The market is very, well, I wouldn't say nervous, but it's very pro-reactive on these numbers. So if we get a number, like the forecast is 227. If we get a number below 210, it's a very strong buy for the US dollar. At the same time, if we get a number greater than 240, it's a big, strong sell for the dollar, right? So that's where you've got to look at it. To me, a neutral number there is 220 to 235. And that's sort of somewhere in the middle between the sort of general range of the data. And then if we look at the next two numbers, okay, the ISM non-manufacturing or the services data, it's called, and the factory orders, if we get sort of consistency with these two numbers with the jobless claims, that's where we get the strong dollar move, right? So to me, a neutral number there is 52 to 54, factory orders 1.8 to 2.4. And you can see the extremes there of the data releases, what it will do for us with a strong buy or a strong sell in the dollar, right? So if we were to get a really strong buying situation for the dollar, which is sort of what we've got from yesterday's data, then you're looking for a number on the jobless claims, okay, below 210, and then on the non-manufacturing PMI above 54.7, which is the top end of the range of the forecast, and greater than 2.6% for the factory orders. Now, the dollar, a lot of the data and the inflation numbers have been weak, right? So to me, these stronger outcomes, I just don't believe it at the moment. And that's where the market is set at the moment as well. And that's why we haven't broken some of these critical levels. So if we go to the next step here and look at what else is coming out, okay, so just looking at the major instruments, right, the major currency pairs. So I've gone through here short-term trends, okay, to identify what's going on there. Short-term, the dollar is bouncing back, right? So we can see the dollar rallying against, the dollar index, dollar Swiss, dollar yen, dollar CAD, and just euro, sterling, Aussie, and Kiwi sort of heading lower. But the long-term trend is what's more important to me at this point, right? Now, the ones with the white sort of circle around them, they are the instruments at critical levels on a long-term basis and could flip. So what am I sort of trying to do here? And this is what you should be looking for. We're trying to match up things. So if we get, okay, the Bank of England don't raise rates, right, hypothetically. Well, sterling is already breaking down. It's already a strong sell. You'd definitely be on sterling, okay? And that would go for the sterling crosses as well. If we look at the US jobless claims and we get a number below 210, so less claims, it's a strong buy for the dollar. And what will that do for us? Well, straight off the bat, the dollar index and dollar Swiss would have to be, you have to be looking to buy a break of those trend lines. We've got trend lines in play where we know exactly where to get in. It's a lower risk entry level, okay? And at the same time, you could be obviously selling euro at the same time there. So that gives you some idea of how to piece things together, right? As I've been saying, the whole dollar picture is like, it's quite amazing. Like, we do have these levels. If I just come back to, say, the major currencies, like, we've got these critical levels. We've got all these trends in play, which is great, okay? But if we hit the switch button, as I said, we're going to need uniformity across these numbers. The jobless claims, the ISM non-manufacturing numbers, and also the factory orders, if they're all strong, we go up. What do I personally think? Well, I can't see all those numbers being strong with the other numbers that we've seen in the markets. This Fitch rating situation, it's just a little bit of a cloud over the market. The market will forget about it in a day, right? It doesn't really matter at this point. So just keep an eye on some of these key critical levels. Now, you can either be trading off the daily charts or looking at your short-term charts and getting these levels up. This is what I would be doing, looking for the hourly support and resistance levels. They give you better opportunities to get in. And if you're not sure if these work, I mean, check out the market is watching these very closely. Breakdown in euro tests, and we're waiting, right? And this is exactly the same on sterling and a number of other pairs. So the trend lines on the hourlies, they are in play, and they are giving us good opportunities here to get into the market, right? So you could be looking to buy if the sterling, Bank of England are hawkish, etc. We've got a level to get in there. If anything, weakness on sterling against the dollar is a tough entry because we don't have any sort of technical levels to break into there. All right, so it's a little bit spicy there on some of these instruments, but on the daily charts, you can see exactly what's happening. I tell you what, I think everything sort of corrects the other way, right? Which is maybe no good to us longer term, but I think the dollar comes back down. I think euro goes back up, sterling back up. I don't think we're going to get consistency across those US numbers, and that's going to create opportunities here for a reversal of what we've just seen in the markets, right? So anyway, there's a fair bit to digest there. The other thing I just wanted to show you as well, which is an interesting thing. You think some of these moves, oh yeah, could be on, could be not. What are we looking for? Well, I tell you what, if I show you the risk reversals, right? So just looking at the Aussie, let me just move my thing down a bit. Okay, calls versus puts, mate. They are buying puts, right? They're buying puts against the Aussie. On the euro, sterling, not so much. Kiwi, definitely, right? So those four major pairs there. Is the dollar going up or down? The market is expecting weaker Aussie, weaker euro, weaker sterling, weaker Kiwi, and that is exactly what we're seeing on the charts, right? So what that is, to me, it's a confirmation that these moves aren't just like a figment of my imagination. They are very big opportunities. So you know what? If we did get stronger US numbers across the board, well, I tell you what, we've got instruments on the downside here, euro, sterling, Aussie, Kiwi, close enough to key levels here. And dollar index, dollar Swiss, dollar yen, you'd have to expect dollar CAD to keep going as well, right? So primed, this is like prime time. It's actually a shame we don't have the US CPI numbers coming out today, because that would be the be all to end all, because that is the key number the Fed's looking at. And that could really, well, not only put the cat amongst the pigeons, it would determine where everything goes, right? At the moment, we've got these second, third tier numbers sort of altering the sort of direction of the US dollar and a number of instruments, but will they hold up against a bigger number like the non-farm payrolls or the CPI? Probably not. But you know what? It's all the little building blocks that give us this situation, okay? The dollar has been trending down. Maybe it's just a clean out. We get a big clean out of those short dollar positions, and then we come back to look for things next week, but only time will tell. I can tell you what, though, I'm just watching the one of the pages here, my risk on, risk off page. The activity here across these instruments, the major currency pairs, is like fever pitch. They're going from up, down. I know that the markets have just reset not long ago, but the market is sort of not only squaring up, but very, like, it looks like it's very nervous, right? And this is hours ahead of the Bank of England and also the US numbers, right? It's a shame it's not on now, because I'm pumped. I'm ready to go and looking for the opportunities. All right, guys. Now, as I said, with these opportunities, don't just throw your cash across the board. Let's wait and see what happens with the numbers. Pick the best instrument that you understand, that you feel comfortable with, because if things do move, you want to feel comfortable. Make sure you can keep breathing as we go through the data, right? All right, guys, that's it for me. Have a good one. Plenty to go through. Great opportunities across the board. Just make sure you don't dig a deep hole here as we go through the next 24 hours. Right, non-farm payrolls Friday. It could be almost too crazy from here, but we'll get some answers today. Bank of England first up, and don't forget, check the sterling crosses because that's where the action's going to be. Okay, and sterling at the moment has been outperforming everything. So just on that, the 0.25% is already factored in, right? So don't go buying it if they raise by 0.25. It's already in the market. It's either they raise by 0.5 or they don't raise at all, and that's where we get the moves. You got the statement, then the press conference, right? So it's hobbity gobbity. There's a lot to digest. Keep an eye on your daily charts so you understand where the bigger trends are, and you don't start selling into something that has a very strong uptrend, and especially when they on a speech like the Q&A they'll get with the press conference, right? They're going to be talking like, we're going to control inflation, right? We're going to do what we can. I can't see any dovish comments. So sterling should probably edge higher, but the market's factored that in, and that makes things a little bit trickier. The US numbers for those North American traders is probably going to be a clear-cut situation because the sterling, the Bank of England will be out of the way, and then you can concentrate on the major currency pairs and the equity markets. All right, guys, all the best. Cheerio.